Hi, I'm Bruce Thompson with Sampson Insurance Agency in Weymouth, Mass. I'm involved with business insurance, and today I want to talk to you about an umbrella policy, an umbrella liability policy. There's some misconception sometimes out there of what it does. Think of it simply as an umbrella policy provides higher limits of liability over certain types of liability policies. Those types of policies are generally general liability, auto liability, workers' compensation, and in some instances, employee benefit liability. It's written in limits of $1 million, $2 million, $3 million on up. We have clients with a $1 million umbrella. We have clients with a $25 and even one with a $30 million umbrella. What I want to mention today is the way that the policy is structured. It provides catastrophic liability. So let's use an example. Let's say that a client's got a general liability policy, they've got $1 million limit, and they have an horrific accident at their location. Not only are employees injured, but visitors are injured, or third parties, other people around the premises are injured. In the event there's bad injury or, God forbid, loss of life, the suit for that kind of loss could be $5 million, $10 million, etc. Depends on what the jury awards. If the client's only got $1 million general liability policy, they're going to come up short on that judgment. So that's the real value of an umbrella. So what it does is it sits over the primary liability, the general liability, the auto, the workers' comp. So it provides higher limits over each one of these policies. It's got underlying requirements, and what we mean by that is before you can have an umbrella put in place, those policies underneath it need to have certain limits need to be fulfilled. For example, the general liability, more often than not, needs a limit of $1 million per occurrence. The auto liability needs $1 million per claim as well. So the general liability policies and auto policies need to be of a certain limit before you're eligible for an umbrella. Those are the underlying requirements. It's excess. So we can write it oftentimes over one policy. For example, let's say there's a client that says, we don't have any autos, we don't wish to have auto liability, but we have a contractual obligation. A third party is requiring us to have $4 million worth of coverage. We'd write $1 million general liability and add a $3 million umbrella over on top of that to give them the $4 million that they're contractually obligated to have. So that's the excess feature of it. The final point I want to make today is it's drop down. So in certain instances where certain limits of liability have been used up, the umbrella policy drops down and fills in those limits, giving the client the liability limits that they had at the onset of the policy. Thank you. I'm Bruce Thompson with Sampson Insurance. Appreciate you listening. We hope to hear from you. We'd love to be of service to you. Check us out at www.sampsonins.com.